Alrighty, guys. Thank you so much for your support. I'm so excited for you guys to be part of our community and part of this indicator. Now, when you first put it on there, it's going to look daunting, and that's why I want to make sure you watch these videos first, okay? Because I'm going to go over each individual part of it as well as a full overview. So this video is going to be an overview real quick just to go over everything that is on the chill range diamond confirmation, okay? Now, that name could change, but it will be probably Chill Range Diamond Elite is probably what the name will end up being. But just to go over everything, because this indicator has a lot of tools in it, and I want to show you exactly what everything is and why we have it there, okay? Main reason why we have so many things into one is so that way people don't have to pay for TradingView, because TradingView only allows you to have 2 indicators. With our 2 indicators, you have about 10 indicators, okay? So that's why we did it. We wanted to make sure everyone could afford to get the indicator as well as have access to TradingView to use it, okay? Didn't want to have to double up. So reason I am going over everything is because there's a lot to it. So first things first, okay? I'm just doing an overview, and then after this video, it's each individual thing, okay? So we have a buy, add, trim, sell labels, okay? These labels are not, okay, they are not telling you to do it the second the label populates. What it is telling you is that the company has come to a specific value, okay, has come to a specific value that tends to be a trigger point for example here, for sellers to come in, okay? Same thing, hit the trigger point, sellers stepped in. Hit this trigger point, sellers stepped in, or buyers stepped in, okay? Trigger point still went up a couple more days. That's why I say this isn't the day to do it. This is just saying it's hit the trigger point that flags this label that we are getting to the point where an action of yours will need to be taken place. So just be aware, right? You want to have a heads up, right? Everyone's always like, should I sell now? Should I sell now? Well, here's a trigger point, okay? This is a trigger point where you should start thinking and being ready to do this, okay? Being ready to trim. So that's what the labels are there for. They are there to tell you this is typically when buyers and sellers will step into it and get ready to look for a potential change in direction because it tends to be a trigger point, okay? ASTS has done great. This is the point where early on in a company's career, right, they become pretty overvalued fairly quickly, but now you can see you're in the trim, now you're in the sell, so now you're just looking for the next thing, okay? Early companies, it's a little tougher, just because, like I said, a company that was $2 and then ran up to 35 quickly becomes overvalued, right? So let's just zone into when they actually had a value. So that's what the labels are for. They're meant to let you know you have entered into the zone where action tends to take place. So just be ready, okay? All right, so that is the buy, add, trim, sell labels. I'm going to go ahead and remove those now, all right? Next one we have on the list is the bull bear line, okay? So this blue line right here tends to be the bull case, bear case, okay? So when you go under that, we're very bearish. When we are over it, we are very bullish, okay? We have some rules. I like to, and I will only trade stocks typically over this line, okay? Because one of the rules is don't trade against the trend. And if you are under the 200-day moving average, the trend is bearish. And if you are over this, it's not a 200-day, it's actually a modified 200-day. But if you are over this, you are typically going to be in a bullish stock. It's currently above 200 days of average of a stock's price, okay? Now, what do I mean by over or under it? I mean, I want the stock, the high of the wick, okay, the high to be under it. This didn't get under it, nothing got under it, right? I want the high of the stock to get below the moving average and continue to see it, okay? So if I just see this and it blipped and the next day we're back above, I'm still going for bullish, okay? It's not just like the market makers will always try to scare you in that little blip, and I guarantee tons of people just sold because they said, oh, we lost the moving average. They sold, and then skyrocketed back up. They will always try to come take your lunch money, so you just need to be a little bit more patient, okay? So that is what the bull bear line is for. If you want to use your own moving average, that's perfectly fine. This is the one that we use to run our strategy, and our strategy has been successful. Okay. So I just believe in this. Once you are below it, our rule is you switch to a higher time frame. Okay. That's our rule. Now, monthly or weekly, I prefer weekly. I'm okay buying a company that's completely undervalued on the weekly time frame. Sure, is it going to be 3 buys versus if you went to monthly being 1 buy? Yes. Okay. But if you're ultimately bullish on a company long term, you could get into it more and you'll be just fine as they turn things around. Okay. Perfect example will be HIMS. Actually, we'll just go to it right now. I'll just show you what I meant by HIMS. Okay, so here's HIMS, right? We have under this moving average, right? Boom. If you stayed on the daily, you would have bought, you would have went up, and you would have bought. Now, why is it green when we went up? We're green because we are still undervalued. You are under the 200-day moving average. You are going to be green for a while. Typically, when you are in a bullish company like HIMS, for example, when you are under that line, this is just undervalued. Anytime you can buy a stock for under the 200-day moving average, it tends to be a great opportunity. That's why everyone's buying United Health right now or NVO right now, because under their 200-day moving average, well below where they were. For example, this was 35 and these guys have been at 70, so you're buying it at a 50% discount below the 200-day moving average. Tends to be a great opportunity to buy stock. But I don't want to buy it based on the daily time frame. I want to buy it based on the weekly time frame. So if I switch over to the weekly time frame, here we are. Our trend line automatically moved, and I'll go over trend lines, but automatically moved. We are now above this trend line, and we can kind of see it kind of curling here. We did get a bounce here, but we can kind of see we're going to get this little curl happening. We got the trend line support. If we lose that, we have another support line down here, which is, I think, the 25 zone. But ultimately, I wait for a diamond confirmation to come out onto the weekly. And you might ask, why didn't you get a diamond here on the weekly or a diamond here on the weekly? The reason we didn't get one is because it's above the 200-day moving average, and we should be on the daily time frame. Okay, does that make sense, right? We're above the 200-day, we're trading the daily. We're below the 200-day, start looking into the weekly, start looking into the monthly. Weeklies are rare, monthlies are really rare. There's only one stock I know right now that we're likely going to get a monthly, and that will be NVO, okay? And when you get monthlies, it's typically an amazing opportunity to go ahead and buy and just hold for long term, okay? Now, I'm going to go back to ASTS. ASTS kind of gives me an example of everything to do, so I just wanted to stick with one, all right? That is our bull bear trend line, okay? So we're going to go ahead and remove that now. Now we have Bollinger Bands. So now if you don't do the wheel strategy, this isn't necessary for you, but it's there, okay? It's great because a Bollinger Band is a rubber band. That's all it is, okay? When you see it go past and it steps outside of the band, it tends to come back in. Okay, boom, boom, boom. Sure enough, the middle line will act like a 30-day moving average of support. But here you go, right up, coming down, boom, test the 30-day, down, test this, bounce off, test up. Okay, it's a rubber band. That's all it is. So it tells me in the next 30 days, kind of gives me a 30-day moving average with a 2 deviation, meaning 2 times to the upside, 2 times to the downside, that 50 is possible in the next 30 days. And if it does squeeze past, kind of like it did here, we can go higher, of course. But when we were down here, this band was up here at 83. So we can go ahead and say we got some bullish momentum, and the target to the top is 83. Okay, so the Bollinger Band does help us see kind of where we could potentially be in the next 30 days. Okay, you want to buy on the bottom half of the band, you want to be selling at the top half of the band. All right, that is what a Bollinger Band is, and that is why we have it. It will default, I believe, to unclicked because most people don't use it, but I like to have it. All right, our legend is going to be our legend, okay? And it's also corresponds with our color coding on our chart, okay? What is the color coding? The color coding is to help you understand where you are in the buying and selling process, okay? And I'll go over it more in detail, but ultimately, as the company is becoming more undervalued, we are getting to light green. and now we're in the yellow, okay? Now we're creeped up, now we're in the pink. Pink goes to orange, okay? And then if orange kept running, it would go to bright red like we did down here, okay? Green, light pink, orange to red. Purple is a sell all moment. Go ahead and just empty it out. And I'll show you an example of why. So if we go ahead and take a look here, our zones are color coded to no, because some people, like, imagine this: a stock runs up, right? Stock runs up super quick, and you're like, oh man, should I get in it? Well, pull it up. All you gotta do is pull it up. Are we in a pink zone, right? Yeah, so we've started entering a selling zone. So it's probably not the opportunity to be buying it. So therefore, I'm going to sit this one out. Okay. It makes it and super easy for you to see by like not going to chase a stock, to understand I am only interested in buying light green zones, yellow zones, neutral zones. If it's orange, light pink, red, or purple, those are all entering a sell or trim zone. I'm not really interested in buying or chasing a stock. I should be looking for the most opportune times, which is going to be in these zones. And that's why we did it. Make it super easy, color coordinated, for you to quickly glance and be like, we're in a selling area, we're in a buying zone, we're in an ad zone, we're in a trim zone. Quickly, if you just saw red and green candlesticks, you wouldn't know what zone you're in. You would just be like, yeah, it looks like we still can go. I think green candles, right? Like that's not what we're here to do. We're here to know exactly where we should be buying and selling, and taking advantage of it. Okay, so that's what the legend is for. You do have the legend up top to tell you the diamonds, which is going to be basically green is stronger than yellow when it comes to momentum. Momentum confirmations. That's why we have a range. Range is the color combos. Diamonds are our diamond confirmations, are our momentum. So green means the company is more undervalued and the momentum is stronger. Okay. Yellow can still be a strong momentum, just in this example right here, boom. But the company didn't get super undervalued. It just barely entered the buying zone, where this was in the ad zone. And what do I mean by entering the buy zone? I didn't know better wording other than it's getting to where you want to add or buy. Okay. But that's more undervalued. Yellow is more undervalued. Bright green is more undervalued. Here's your yellow. Okay, neutral zone. Not a whole lot, but there's still some momentum. As you can see, we did get a 1-day pull, but back down. Overall, if you go ahead and hold through this with a good company, you'll be just fine. Just make sure you're above the moving average, and you can still trade the daily just fine. Okay. That's what our confirmations are for. Purple is sell all confirmation. Same thing goes. Orange is just like a yellow, where it's not as overvalued, and it's not like here, this is not as overvalued, right? And it's on neutral candles. Okay. Now we have a red diamond. Well, red diamond is because, you can see, we are more overvalued. Therefore, a red diamond is more like stronger, as far as downward momentum goes, compared to an orange. Okay. Doesn't mean you don't follow them, but it does mean be more aware of what is going on that diamond. Okay. Of what's going on right there, because both times diamond, you had a nice drop, came back up, diamond, another drop. Okay. You had an orange on a neutral. Okay. And I'm going to go over all the color combos in the next video. So I just want to get through the overview of what everything means. Okay. So I'm going to go ahead and remove those legends. Trend lines, okay? We have previous history trend lines and the active trend lines, okay? So previous trend line is just the trend line that it was previously following before it established this new trend line. Okay, so that way you can see, if you were to lose this trend line right here on this downturn, where would it have gone? It would have gone down to 45 instead of finding it at 50. Okay, trend lines will adjust live as needed, so they don't just stay there. So when you look at your trends, you can draw them yourself if you wanted to. You can draw other ones, but these are the trend lines through backtesting and finding the exact type of trend lines that the algorithm needs to look for tend to be the most successful trend lines to follow. Okay, I can click on pretty much anything, and within a couple seconds, I think, yep, boom, there's your trend line. Okay. Okay. And sure enough, what did we do? We went ahead and bounced off that trend line, and we went to the top of this trend line. And today we had a little bit of red rejection. Okay. These white lines won't be on there. Those are my drawings. But sure enough, you got your greens and yellows. You got some small trims along the way. You had a red here, another buying opportunity, and back up we go. Okay. That is how that works. That is your trend lines. Like right before, right? See this? Boom, boom, boom. We were in this trend. You can see these little ones. Boom, boom, boom. And then sure enough, we broke out. We hit resistance, came back down, find this bottom. So now you're here, and you should they still act as support resistance zones. So when this comes back down, we should find support on this line. If we lose this line, we should find a little bit of support here, right? And then if we lose all support, we should come back down into this channel, okay? Pretty much any stock, and auto trend lines are the nice ones. There's a few that work on all time frames. Trend lines is one of the ones that works on any time frame. But as far as what will, as of right now, when I send out the next update, as of right now, stick to the daily and weekly time frames with what is currently out. Okay. The new update coming out, I'm working with someone because TradingView has been giving issues to try to formulate multiple time frames across the board. But 2 hour, daily, weekly, and monthly are going to be the ones that come out. And then maybe down the line, we start working on some day trading hours. But I want to make sure we can get this one completely fine-tuned before I start spending time on trying to master a whole nother set of time frames and figuring out all those algorithms. So daily, weekly, monthly, you could do monthly just to get an idea. 2 hour, wait till the new one for the buy sell alert diamonds and everything like that. Obviously, if you just want to look at that time frame to see, but the trend lines will change. So if I went down to 2 hour right now on this one, there's your 2 hour time frame. Boom, should get a little boom, 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 boom. Okay. So it's nice and easy to see on the 2 hour time frame. If I just switch to any of them, this is obviously downtrend, so I wouldn't do 2 hours. For this reason, you're just going to you're in a downtrend. Any sort of momentum picking up is going to be a lot of chopping momentum. This is why when we go below the 200 day, we go ahead and we trade at a higher time frame. Okay. SoFi, for example, here's another trend line. There you go. Okay. We broke out, we came back, we retested, and we're holding on the 2 hour. Okay. What's the 1 day look like? Okay. We're at the bottom of this trend. Can we bounce back up and get up here and retest 32? I think that's the next play, right? So that's what's super nice about these trend lines. I can just go ahead and hop right to any chart, and it will go ahead and tell me what is going on. All right. So that is our automatic trend lines. If you don't want to see the historical trend lines, just because it gets a little too messy maybe for you, you can go ahead and remove those. If you remove the show active, it will remove the history ones as well. Okay. If you want color changes or anything like that, you can go ahead and adjust. But that's our complete overview of what each one is showing you. Next couple videos are going to be going over each individual one a little bit more in depth. All right. Thanks, guys.